Hey guys, it's Aman
and Christina
from Our Rich Journey. Welcome back to our stock portfolio series. If you've been keeping up with us, you know that we invested $10,000 in December 2018 and it is now February 2019. And when we invested, people thought December is the worst time to invest because the market was tanking. Well, in fact, since then the market has rebounded, and it's rebounded big. Some sectors of the market are up as much as 20%.
In fact, if you've seen one of our last videos on our Vanguard portfolio, you'll see that our index funds are up since December between 10 and 20% right now.
If you want to learn more about the index funds that we're investing in, go check out our Vanguard portfolio video. But today, we're talking about the Robinhood account, and we're talking about the individual stocks that we are investing in to build a high dividend portfolio.
So just to quickly recap what this series is about, in December we invested $10,000 into individual stocks, and every month after that our plan is to invest about $833 so that we invest a total of $10,000 a year in these specific stocks, and each month we track the performance.
But in addition to just tracking the performance, we always like to answer questions about investing. So we're using this series to both show what everyday investors do, but then to answer questions about what we go through as investors.
Now, when we make these videos, we always ask you if you have any questions, please leave them in the comments, because we like to go through the comments and answer each specific question. But when we see common themes that are running, we like to use those questions and take an opportunity to share that on a video rather than just answer it in writing. So in this video, we have two specific questions that we've identified a recurring theme that keeps coming up. And we're going to go through those answers first, and then we're going to talk about the specific performance of our stocks after that.
So let's talk about this first question. I love this question. I mean, people are gonna go, I think they're gonna get excited about this one.
Yeah, so this first question we get all the time is that why are there so many negative and positive comments on the same topic about the same stock?
Oh yeah, the comments, I mean, people are very opinionated about the stocks that we've selected. And we really wanna talk about this because there is a lesson to be learned here, and it's about market sentiment.
So what is market sentiment? Market sentiment is the overall attitude of investors towards a particular security or financial market.
Okay, let's break that down into English, okay? It's basically crowd psychology. It's popular opinion, how people feel about a stock or how they feel about the overall stock market. It's just the general feel. So to really drive this point home, we are gonna use one of the stocks that we picked. We're gonna use IBM. And if you look at the comments that are made about IBM, you will understand what we mean by market sentiment. So the first comment, I don't like IBM nor GM right now. IBM is trading at 17 times its earnings. GM is currently trading at 62 times its earnings. When they said they bought ATT, I was cringing. Then they said IBM, IBM has had abysmal sales growth over the past few years. Not sure if it will be sustainable in the long run. IBM, I would not have bought.
So those are some pretty negative comments about IBM, but if you look at it, it's just a small microcosm of what people think about IBM. So for every negative comment that we've received, we've also received really positive comments about IBM as well. And despite the negative comments that we've been reading on our videos about IBM, and this is just an example because we see it on all of them, but IBM still continues to do well.
Well, that is because the bears aren't doing as well right now. People are more bullish on IBM. This has to do a lot with market sentiment. Of course, IBM had a really good quarter, but the overall sentiment for the company is very positive. The outlook, especially for IBM, is very positive. And the stock market has really bought into that.
And I think it's really important to note that market sentiment isn't always about the performance of a company. Sometimes it's just about the general emotion that people have associated with a specific company. And I'll give you an example. In the early 1980s, Johnson & Johnson lost 17.5% of its stock value in 1 week after someone illegally tampered with Tylenol and put cyanide in Tylenol, and as a result, several people died. Now, Johnson & Johnson had nothing to do with this, but the emotion associated with Tylenol and cyanide and Johnson & Johnson was so negative, it caused such a huge and drastic decrease in their stock value very quickly. Now, shortly after that, Johnson & Johnson pioneered tamper-proof packaging, and as a result, in the 1980s, Johnson & Johnson turned out to be an incredible investment.
So what does this mean? It means don't go with the emotional swings. Now, what happened with Johnson & Johnson? People in the short term overreacted because in the long term, if you stayed invested in Johnson & Johnson, you did very, very well. It is the exact same thing with many of the stocks that we invest in, and it will be the same with the stocks that you invest in. Something will happen, you'll see the stock price fall, or someone will say something that will kind of shake you a bit, but if you're a long-term investor, you stay the course. You continue to invest.
So the real lesson is whenever you have stock investments, someone is going to have an opinion about how you invest and what you're investing in. So the idea is to stay disciplined, figure out what you want to invest in, and then don't get swayed by people's attitudes or people's moods in terms of what they think you're investing in. Stay the course.
And I just have to say this. There's no such thing as a perfect company, because if there was a perfect company, we would all be investing in it. And that company would be a gazillion dollars. There's always going to be a positive and negative. No company is perfect. But what you do is you do your own research and you come to your own determination on whether or not you want to invest in that company.
Let's move on to the second question. And the second question is, what is our investment strategy and goal? Now for us, our investment strategy is to invest in high dividend stocks, with the goal being to generate dividend income in the amount of $1,000 a month. Now to achieve our goal, we've created an income portfolio. There are actually 5 different types of portfolios that you can create, but the one we're focused on in this goal is an income-driven portfolio.
Yes, but that is for us. But let's talk about some of the other portfolio types that others may be interested in.
In addition to the income portfolio, there's also the defensive portfolio, which is fairly low risk, but with smaller returns, but also you have lower volatility. Typically, companies that make products essential for everyday life would fall into this portfolio.
The third type is the aggressive portfolio. It's made up of high risk, high reward, volatile industry type stocks. So it's a lot of tech companies and new companies.
The fourth type is the speculative portfolio, which is probably the riskiest one. It's extremely risky, but there's a potential for higher rewards. Things like IPOs and small cap companies would fit under this portfolio. And the fifth portfolio is the hybrid portfolio that's similar to our Vanguard portfolio that we shared. It's typically low risk, low reward, but it's a lot on diversification like bonds, commodities, real estate, and blue chip stocks.
So thank you guys for the questions. They are wonderful. Please keep them coming. But now let's talk about our portfolio and how it's performed.
Let's start off with dividend payments. AGNC had a payout of $10.26. MPW was $15. Maine was $5.27. PSEC was $9, and AT&T was $18.87. That makes a total of $58.40 in dividend payouts. And since December, that makes up $84.16 in dividend payouts.
$84! I mean, we're not rich yet, but it's all gonna add up. I mean, slowly but surely, as we add money to the portfolio, we will be collecting more dividends because we will be buying more stocks. And we will eventually get to the $1,000 a month in dividend income. But let's get to the stocks now. With the dividend income that has come in, plus the $833 that we religiously invest, we add that together with some other funds that were left from the previous month, we had $935 to buy stocks with this month.
So the first stock we purchased was AT&T. We bought 3 shares for $29.08 each. We now own a total of 40 shares at an average price of $29.65 per share. Our total amount invested is $1,186, and the current value is $1,163.20, making this a total loss of $22.80.
The next stock is IBM. We bought 1 share for $132.66. We now have a total of 10 shares at an average price of $121.50. Our total amount invested is $1,215. The current value is $1,326, making this a total gain of $111.60.
The next stock is AbbVie. We bought 1 share for $78.32. We now own a total of 14 shares at an average price of $85.83 per share. Our total amount invested is $1,201.62. The current value is $1,096.48, making this a total loss of $105.14.
Next was GM. We bought 2 shares for $38.54. We now have a total of 34 shares at an average price of $34.24. Our total amount invested is $1,164.16. The current value is $1,310.36, making for a total gain of $146.20.
The next stock is Ford. We bought 11 shares for $8.34 each. We now own a total of 148 shares at an average price of $8.59 per share. Our total amount invested is $1,271.32. The current value is $1,234.32, making this a total loss of $37.
Next is Iron Mountain. We bought 2 shares for $36.61. We now own a total of 32 shares at an average price of $34.11 per share. Our total amount invested is $1,159.74 for a current value of $1,244.74, making for a total gain of $85.
The next stock is Medical Properties. We bought 5 shares for $18.16 each. We now own a total of 70 shares at an average price of $16.97 per share. Our total amount invested is $1,187.90, and the current value is $1,271.20, making this a total gain of $83.30.
Next was AGNC. We bought 5 shares for $17.80. We now own a total of 67 shares at an average price of $17.79. Our total amount invested is $1,191.93 for a current value of $1,192.60, making this a total gain of 67 cents.
The next stock is Prospect Capital. We bought 14 shares for $6.46 each. We now own a total of 176 shares at an average price of $6.70 per share. Our total amount invested was $1,179.20, and the current value is $1,136.96, making this a total loss of $42.24.
And our final purchase was Main Street Capital. We bought 3 shares for $36.85. We now own a total of 32 shares at an average price of $37.42. Our total amount invested is $1,197.44. The current value is $1,178.88, making it a total loss of $18.56. So that's it, our portfolio for February. Since we started investing, our portfolio is up $201. But you know what? Our journey is just starting with this portfolio. We will continue to invest every month our $833 until we reach our goal of $1,000 in income generated from this portfolio. If you guys like this series, please give it a thumbs up, subscribe to our channel, and join the journey.